The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's down 2 at 18,207. S&P's down 1.84 at 2,113. Comp index is up 2 at 49.69. You've got the VIX index down 44 cents at 13.25. You've got the this right here. I'm showing the E-mini futures trading down 250, and we've got leg C in the weekly chart, and we've got a peak D in the 120-minute chart. What is really important right now, and I'm anticipating that it's getting a little harder. You can see the arch formation forming there. Doesn't say that you've got to go all the way back and take out the low of 2,082.25 that was made on the 20th, just 4 sessions ago. But it does say that there's a chance here that over the next few days, if there is no new high, or let me put it this way, there could be a new high above 2,115.75, but I don't think it'll be very high, much higher. It may be a point or two maximum. That's kind of what I'm thinking. And I suspect that we're in for a kind of a consolidation. It's already begun. It actually has been unfolding in certain sectors, but not in others. And my suspicion is that we're making some kind of at least a near to short-term top, 1 to 3 sessions, perhaps going into Monday or Tuesday if there is no high, or if there is a high, but then we take out yesterday's low in the E-minis, which was 2102.75. Then I suspect we've got a little bit of a digestive phase, and that says that we could pull back and then take all of next week to climb to a new recovery high. But if there is a new high next week in the E-mini above the, I haven't typed it in, so it's 2,115.75 level, 0.75 level, on Monday, Tuesday, Wednesday, Thursday, Friday of next week, all it does is continue leg C, and you cannot make a leg D until 2 weeks' time after that. So what I would be anticipating is just some kind of, let me just draw it in here. This is just an anticipation like that. What is that date? That is the 2nd of March, correct. So then we would go into a pattern that says it isn't until the following week, maybe, that we start to make new recovery highs, and that would be new all-time highs in some of the sectors. I'm watching this closely. All I can say is that the stochastic at 97%, MACD still very strong. For my subscribers, we took a position today which basically is saying that we do anticipate some kind of a minor pullback. We'll see what happens. Day is young, and there are a lot of buyers out there. So let me just run some of the numbers here. We've got the Dow, we've got the S&P, got the comp index, and what's really important is that the leg C. So the MDY, which is the mid cap, there it is, C, which is the mid cap S&P 400 depository receipts, is saying that it is in leg C in the weekly chart. Let me move this away. It is in leg, I've called it leg B in the monthly chart. Boy, I could be wrong about that, but I'm calling it leg B. It has got leg C, 276.45, 276.53. It just made a leg C today. See, this is the reason why I'm thinking that there's still internal strength, and that there's maybe a day of weakness tomorrow, a little pop-up on maybe Friday, and that makes next week absolutely critical. Why? Because if this is leg C and you don't make peak C until Friday, there's a good chance that the MDY, trading at 276.28 down just 6 cents, will make a new recovery high. But I have signs here that are saying, be careful this particular index is becoming a little bit toppy in the shorter term. The weekly is still looking very good. I mean, right at this particular point. So let's go to the QQQ series. It's a good time today to be able to go through a chunk of this stuff here. QQQ is in leg B, possibly a peak B today. That says you still got to make a C and a D. Wow. Is that, yeah, that's unbelievable. But that's what I've got. And it's leg E/B in the weekly. And the 120-minute was the question. And I've got the 120-minute at a peak E ready for a little bit of a pullback. And it's kind of what we're getting right here. So now want to go to the New York Stock Exchange, NYA.X. Leg E, possibly a peak E today. You see, some of these indices are getting a little stretched. Now, they could recycle. That happens in the Chapman wave. And boy, when they recycle, that is a powerful move to the upside. That could be E/B. Why? Because you've got a Chapman wave instant restart potential right there. MACD is very strong. See, the MACD and the stochastic are suggesting that we could go to a G in the New York Stock Exchange before there's a pullback. But as brand new leg B in the weekly chart, I have to tell you, this is just one remarkable market. Now, this is going to be interesting. So the IYC, and this is the cyclicals, is in D right now, C in the weekly, D in the monthly. I want you to go to XMI. The XMI is I discussed it yesterday. It's a major market index, really a great mix of cyclicals, defensive stocks, dividends, all sorts of things. And it's possibly making a peak D if there's no new high today. And we are waiting. I'm waiting for a new all-time high above the week of the 26th of December, where the Dow had made its high. Everybody had made the highs. Then they came down, but the Dow and the S&P and the NDX have gone to higher highs than that December 26th high, but not the XMI. Why? It's got Exxon, it's got Chevron. Yeah, it's kind of tough, but look at this. All it needs to do is to get to 1920.90, and yesterday's high was 1916.52. Possible. And then we've got to be a little bit careful when we get there. Now, let me just check this out. Oh, here we go. Gold. Gold is trading right now up 650. It had a spectacular. It wasn't spectacular. It was spectacular in relation to what's been going on for the past couple of months, but it really wasn't. It was up 12 something overnight. It went all the way to 11.70, hit the 1210 level of the 9-period exponential moving average, bam, right on the nose. And then what happens? It gets repelled. Now, the repel is going to be noticeable if by Monday, if gold goes underneath 1190. But right now, it looks between the 120-minute chart and even the weekly up, let me put this in, the up track of the Chapman wave inside. Oh, man, this is a falling axe pattern, but it's a reverse. It's the inverse. It's upside down. Look, that's upside down, which also portends a potential H pattern. And we haven't got leg D, and a C minus failure, it's not a C minus yet, would be very negative. I'd have to call it a C minus if it goes underneath 1168.50 on the continuous contract. So in the meantime, back at the ranch, gold is still looking very poor. I mentioned yesterday that the slow stochastic was only at 10%. It was actually about 9%. Now it's at 10%. It's just not doing that great. That's all. I think gold, I see a mid-March rally sometime in March when the market pulls back. I think that gold could have a decent rally. And in the meantime, back at the ranch, it's not doing all that well. Silver, same thing. It's holding its gain much better. This is trough F. If it doesn't make a new low today. And so far, it's holding a little bit better. And actually, the weekly chart is just a tad better than gold. And we're going to go to high-grade copper. Why? Because we got that leg D yesterday. Unfortunately, the weekly chart is suggesting that unless copper can get to 2.70 and hold there, there's a lot of resistance in this area. I'm so pleased that it's gone in the Chapman wave from a peak A to a B to a C1, C2, and then plop. Pop. It goes right to the moving average right there. I think that's the 32. No, it's the 50-period moving average, and then it gets repelled. And now it's holding above the 32-period moving average. So that's okay. I'm still watching it very closely. Let me also look at the dollar. DXY, and then we're going to go to some of the stocks. Dollar is just in that trading range. It can be very frustrating for the bulls and the bears, but once you identify a horizontal, a sideways move, it's so much better. Get that chart pattern in your mind, lock it in, because once you see it, you know that at the bottom you want to buy and at the top you want to sell, and at some point you'll be wrong, and therefore at that period where you're wrong, you're going to get finally a change of direction where the trend starts to become a real trend instead of just a trading range bounce up and down, up and down. So let me just click this to see if there are any emails, and then I'll come back to, here we go, EUR, USD, this is the euro dollar currency pair, trading range, narrower and narrower, and then USD, JPY, trading range. Yep, trading range. What can I say? Trading range is trading range. Look at this. This is a trading range right here. That trading range lasted quite a while in the E-mini. Then went to a higher level. Now it's forming another trading range. If the E-mini takes out 2106, it's trading at 2111 right now. That'll portend to move down somewhere into that candle with a low of 2102. 2102 is that particular low. And if it moves up, then it'll test the 2115 level. Just stuck there for now. Am I missing something? Of course I am. Bonds. Now, bonds had a really good move yesterday and a nice follow through upper level or higher level in this little trading range support. But the whole thing is that is in its lower, let me show you, in the lower range, which portends an H that can go to a lowercase m pattern right there. All right. I'd shown that yesterday. I believe I'd shown it in the bonds weekly chart. There it is. Now, that's kind of what I'm looking at right now. So it's good that bonds, the TLT is down 13 cents at 129.54. Okay. It held the 126 to 125 level. That is critical, because if it breaks that, that's not good. But it's not good for bonds, but it might be very good because money will start to flow into the back into the equities. Now look at this. This is your T note, 30-year T note. Sorry, 30-year T bond yield went to a peak A, had quite a sharp pullback so far this week, and peak A in the so far. It's a leg A. It'll only be a peak on Friday if it doesn't make a new high. And that's the 10-year note, and that's the 5-year note. So those are the questions that I had for myself, questions in the den. What about WUMA? WUMA right now. Where did it go? All right, I'll be back, and we'll start looking at some stocks. Let's take your calls. And, Uber. Uber. There it is. Uber. Held the 9-period moving average. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So this is a great question I had in the den. Basil, can you look at Len? So Len, I've got right now, you see the MACD? It's got this little dolphin face over there in the MACD, right, with that green line. And you see the stochastics at 91% starting to pull back. In other words, it isn't confirming the latest high bar. An on-balance volume is still right way at the top, but it has to be watched very closely. However, the stochastic in the weekly chart and the MACD have just started to kind of break out, and the monthly chart is possibly turning up. So looking at this, it says to me that the rudder of the daily chart is going to be very important to monitor. And that says that I could call this F/A. It could even be a Chapman wave instant restart. There would be a flat base restart with the implication that we'll be coming back down and that the 49.26 level will be, that the 49.31 level will be taken out regardless of how high we go, and this would be leg B, and then we go to a C, a D, maybe even an E, and that would take you like 2.5 weeks. So what I would say is this: I don't know whether you're long or whether you're short. You're just looking at it. I would not be looking to short this, but also at this particular point would have to wait for a test. It's 5103 LEN, Lennar, Core, Home Builder. I'd have to wait for a pullback. And that pullback would be very important because it needs to be into the 50, between 50.20 and 49.20. And that's where I want to make my decision. I don't know if I want to put a buy in there unless it was a small position like a starter position, saying, hey, the weekly is still very strong, possibly leg E, and this is recycled to A, but we have to be conservative, so call it E. And that says that the home builders, because rates are still low, even if there is an uptick in the mortgage rate because of the recent bump up in yield, as I was showing just now over there, right, going from 22.26. That's the 30-year. It's really the 10-year going from 1651 to 2152. Hey, five points. Hey, that's big. So I'm watching that closely. I'm also watching this. That's WOOD, is the iShares Global Timber and Forestry ETF, made a high of 56.67. Week of the 13th of February pulls back. 56.67, 56.41, and then 56.69. So it's gone to an E. Now, when you get to the E so quickly after a D, I always say, okay, this is just the time to be a little bit careful. Yep, there could be an instant restart, but I want to see a close above the previous high. That'll be important on the weekly chart, because a close in this case underneath 50, it's at 56.27, close under 55 would be a negative. I say, whoops, you made a short-term top. The weekly of the housing sector is in leg D. I haven't got a sign except for that dashed line, which has been resistance, and it's right there now. So I don't really have a sign to say that it's turning down. I have a sign to say it's continuing to go higher. So let's go back to Lennar. So the question is, if you have Lennar, then all I would say to you is fabulous. I'd put a little note here saying to myself, watch closely the 50.20 area to 49.90. Why? Because if it breaks under that and then it takes out 49.26, let's call it 49. If it goes into the 48s over the next 2 to 3 weeks, that could say short-term top is involved. And if you want this as a longer-term position, I don't know where you got in, that's something else. But if you're saying to me right now, what would you do? I'd have to say that the weekly chart looks very good. I don't really want to buy at this price. If it breaks out to the upside, I'm just going to have patience and have to wait. But if there is a pullback and I can get this pattern right here, because you know that I love this particular pattern, that pattern right there, and that would say choppy, we come back down a little bit, we get to the 49.50s, then we have another rally. And if that rally doesn't take out the low, if we haven't taken out the low of 49.26, in the next 2 weeks, but we've just chopped around here without breaking out into the 52s, that's saying, hey, that's the pattern to watch for the Chapman wave, leg, body, and then you want the neck. And then I'd say right there, if the MACD and stochastic are holding very well, I want to buy this between 50.20 and 49.50 with about a 1.5 point stop. Why? Because then I'd be expecting 52 is the next step up. Gee, I hope that helps. Okay, we'll be back. We'll look at Caterpillar when I get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Just wanted to say that Caterpillar, the question that Dan, I said I'd get to, I just did in the trading range. Can it go to a leg D? It's at 84.62. Yeah, I think so, but it's just stuck between the 86 area and the 81 area for now. Sideways trading breaks either one of those levels, and it goes either higher above 86 or it goes lower if it breaks that 81 key support. Then the other one was Pell. Pell I took off my list because it was doing so badly. Went all the way down from the fours and whatever it was when I used to look at it, threes and fours. Now we're looking at a low of 0.12, 12 cents. But wait a minute, that was then. Now it's up in leg B at 0.33. And the question is, what about it? I tell you what I'm going to do. I'd like to spend a little time with it, so I'll look at it a little later. It's tough to buy now because it's in leg D in the daily. So let's leave it for just a moment, and I'll try to get to it before the end of the show, or I'll do it in Larry's show. But in the meantime, I want to go to Jerry in the Back Bay in Boston. Jerry, how are you?
All right, how are you?
I'm well, thank you.
I'm just checking back again on oil. You know,
yes.
I think oil is going to break down again, another level, about 10%. And I thought it was clever this morning. The Saudis came out and they said that, well, don't worry about oil. The demand is going to pick up and hold up the price, and that so we can keep on producing and be the largest producer in the world. So he's diffusing other people who want them to cut production.
That is so interesting, and they obviously have the upper hand. They can make decisions like that. But Jerry, you know what we had discussed before is unless crude already kind of broke out and held above the 9-period moving average, and the USO in particular, using that as an example, was able to trade in the 20.50 to 21.20 area to show that it's using the 9-period moving average as support, then yes, there could be rallies, pop-ups, but they would be more in the form of the lowercase h pattern, which we've got. They could go to a lowercase m pattern. And that I didn't see right at this particular stage that it would break the low. USO would break its low of 16.30 until it would finish the sideways move. And I think we're still kind of in the sideways move. So I think that we're looking at the same pattern that we've seen in other areas that have gone sideways, that in this particular instance, we might be looking now. I'll draw it in. Let's see if I can get it as accurately as yep, there it is. That is now another rectangle formation, and it's narrow, and it says 18.85, maybe a touch of 19.15 is the upside strong resistance, and the support is at about 17.50 to 17.35 in the USO. And it's just going to be very frustrating for people thinking that it's going to break out, because at this point it looks like it needs, after such a, if you look at the weekly chart,
I'm thinking it's going to break down to 16.
I don't disagree at all, but I think first it has to get rid. You see, when a price comes down,
it's going to take more time then?
Yeah. So when the 9-period exponential moving average becomes a barrier in a weekly and a monthly chart, what happens very often is finally you get to a basing level, and that basing level looks like, great, now it's going to turn around. Well, either it makes a V-shaped recovery, and that V-shaped recovery goes right back through very important left side icons. And in other words, it might be a candle. In this case, I would use this doji candle on the weekly chart of the 19th of December with a high of 22.43 and a low of 20.53. That would be my left side if it was a V-shaped pattern forming. But until that happens, and you need to break one of the moving averages, in this case, it's the 9-period moving average at 1952. It's over a point lower. I think it's going from I'll draw it in here. It's going, we saw this in the GLD. It's just a very familiar pattern. Doesn't have to do it exactly each time, but basically what happens is that it goes into shock because it's been decimated. And then what happens, it tries to rally, and then it realizes, you know what, I can't get my feet off the ground. I've got to keep trying to build a base on that support level. And that whole support level is around about 17 and a half. So I'm anticipating that it could go on for maybe a little bit of March sideways, but the actual break to a lower low below 1630, I think will come, and it'll probably come, ironically enough, just before the spring, summer driving season. And the way it's looking right now is, I would just say to you that a break below a break below 1750 will suggest that the retest of the 1650 to 1630 level will happen now rather than a little later. But as I see it, I see the upside as being very limited. But just for now, I see the downside as having some support. It's just more time. And what happens?
All right.
And what happens very often is that when something has had a sustained move to the downside that has taken a period of time, more like 8 months to a year and a half, which is exactly what we've got here, then the finding of support means that you've got so many people that are just wanting to get out of positions that they've been stuck in for so long. It puts a lid on the upside. But at the same time, there are people saying, hey, I think that it's made a low. I think it's made a low. I want to be buying it. Yeah. And then both of them will be proved wrong at some point, because what happens is, I suspect we will get a slide into the 15s at some point, and then the bearishness will be overwhelming, and we'll get a really big rebound back into the 17, 18 area. But I think, yes, I see us taking it.
Yeah, over time, yeah.
Yeah.
You know, the XLE has like record amount of buying. You know, increases in the amount of ownership in the past 2 or 3 months. So there's a whole lot of buying.
I thought
A lot
I'd
of
heard
bottom fixing
that,
going on.
but it kind of went right by me. I couldn't really believe it, but I thought, well, that kind of makes sense because it was such a leader for so long. People have a habit of going back into what treated them well before. So basically what we're looking at is wheel spinning. That's the way I look at it. In other words, you're on either the ice or you're on quicksand, and you put your foot on the gas, and all that happens is that the wheel spins around and makes a lot of noise. You know what I always think of, Jerry? I think of a dog when it jumps into the water and then it comes out, and everybody's looking at the dog, and the dog flaps itself side to side to get rid of all the water, splashes everybody, and then what happens? It's gone nowhere. It's just still standing there. Everybody's wet, and that's kind of the way I look at these things. Oil at this point is flapping its wings, but it's really not going. And the XLE, all I can say is that the XLE weekly has the H that looks like a lowercase m pattern as well, and that the monthly chart has not yet shown any strength, and the weekly chart showed enough strength for it to go from the 7170 area up to 82, so that's 11. That's pretty good, but they've both stalled, and the MACD is flattening out, the stochastic's flattening out, and the price. All I can say is that if the XLE takes out 78.50 to 78 support, it's got a real problem in the weekly chart. But we'll see.
Thank you very much. Have a good day.
Thank you. Thanks for calling, Jerry. So, folks, what I want you to do is I'd like to go back to PEL, because that's I often do platinum. That's at PL. But this is palladium. I don't have a symbol for palladium. And PEL is North American palladium. It's trading at 0.33, up 3 cents. It's had a I don't know what it is. It's had a spectacular move to the upside. Now, I don't know if there's any ingredient in palladium. Probably I should ask Dave White, our guru here on all these technicals in the fundamental area. But I don't really know if it's related to the auto industry at all, because if it is, then I want to buy PEL at some point. Treat it like an option. If I could get it between 0.28 and 0.24, maybe that's the place to get it. And you just buy a little bit. You don't get carried away. You don't say, oh, my goodness, I've got $10,000 to spend. I'm going to buy this. 0.26 into 10,000 goes how many times? Yep, that's it. I'm going to buy. And then you put the whole order in. That's not the way to do it. What you do is you look at the chart pattern. The chart says, hey, I don't know what this is. I don't even know what the price is. But the pattern says I'm above the 9-period moving average for the first time in the monthly chart. First time on a closing basis. Going all the way back to the breakdown back in May of 2011 at $6.44 to $3.33. Here it is. Take away the 3 and we've got 33 cents, and it's come off. It's doubled from the 12-cent low. That means it's now getting a little pricey. So I would, if I was thinking of it, I would like to make a note. In fact, I'll write it in here. I'll put it in for a couple of days' time. I'll just put in PEL. What did I say? 0.28 to 0.26. PEL. PAL. 0.28 to 0.26. Look at again. But you know what happens in these cases? You do your notes, you do your everything. The price is independent of your thinking and has no idea what you're thinking. So we'll see. Maybe it goes to 40 and it doesn't ever come back to 2.28. I don't know, but it is great. Now, so here's my question. Hardy asks, Basil, could you give your opinion of PEL? It has been ramping upward lately, and I wonder if its upside. Thanks. Now, I would. Gee, you should have called me 2 days ago and emailed you. We would have looked at it, and I would have said, "Well, it's above the 200-period moving average in leg D. I suspect it's going to come back and test 0.26, where the two of them might cross, and the MACD and stochastic are very good. And then today I'd still be looking, and there's no chance of getting in at 0.33. It would be up 7 cents, big percentage gain. So the same thing would have happened. But I would definitely, let me just see if I've got a stock here that I can show you. ARAY. I'm just grabbing this. This is just in a scan that I have here. So look, Okay, that's a little bit better. Let me see if I can get another one. I'll do this all over again. Give me a second. Getting rid of that. I'm going to do a scan, and I'm going to see what comes up, and I'll show you something very interesting. Zita says, I speculate oil is bottom. Gee, I don't know about that. You might be right. We'll have to see. Give it another. I need to see it for the next 2 weeks or so before. Okay, LZB. Let's see what we've got here, lazy boy. LZB is what? I don't know what it is. LZB is lazy boy. That's not what I wanted to see. LLNW. All right, so it's not going to work out. I thought every once in a while I'd do the scan, and I've got I've got a stock. I love the stock earlier on, and I was just about to put it in from a subscriber, just as a high risk, high reward type trade, and then it spiked up. And then every day it spikes up, and now it's in leg C. I'm not sure yet whether it's going to the 331, 331, 331. How'd you buy it? Yeah, look at the MACD, look at the stochastic, everything's great. Look at the weekly chart, leg A, leg B. I think that's leg A, leg B. So what do? You just grab it at 3.30. LLNW is the stock we're looking at. Limelight Networks, have no idea what it is. It's A, B, C, D in the monthly chart. It's A, B, C in the weekly. Everything looks great, but you just grab it here at 3:30. Close your eyes and say, "Hey, for me personally, I can do that. I don't mind doing that because I like everything's in sync, and it would go. And if it pulled back, even 60 cents, big percentage gain." Even 20%, I'm still saying to myself, hey, it should make a D, et cetera, et cetera. But, when you've got subscribers, it's a big risk. I don't do 20% losses like that. That I don't like. So there are stocks that go vertically, and you don't know when to get in. I was asked about Apple earlier on. Look at this Apple weekly chart. Look at the monthly chart even. That is not necessarily vertical, but it is really an accelerated up move. And right now it's gone to peak G/C, potential move just a tad above 133.60, and then maybe it starts to take a little time out into next week. Who knows? Leg D in the weekly, leg E in the monthly. Do you grab Apple now if you've never owned Apple, or if you have owned Apple but you got out a little early and now it's at 131? Well, that's just not the way I like to do things. I like to do my homework. I've got a peak E in the E/A, that is, in the 120-minute chart. I'd want to pull back. I'd like a better risk reward. Yes, it's one of the go-to stocks. I have a feeling that when Apple has finished this move here, it's actually going to have a pretty decent pullback, and it could surprise people. So that's what I wanted to mention about just grabbing stocks at highs. There are times that you can do it, and then there are just times. It depends on your portfolio. It depends on your risk reward. It depends on whether you say, you know what, I love the way the stock is acting. I keep missing it. I do want to buy it. I'm only going to buy a little bit now, and I'll have a bigger stop because I can afford to have a bigger stop because I'm only getting a smaller position. That's a better way to play it. Now, a question in the den about cotton. Is CT cotton? Yep, I think it is. Yeah, made a peak D just above the 200-period exponential moving average. Oops, no, that's not cotton. That is cotton. CT. Yep, cotton. Continuous contract. And I'm watching it because the weekly chart is very nice, and the monthly chart has held the 200-period exponential moving average. How did I just jump to cotton because it was mentioned in the den? XLE, I thought I did the XLE. Oh, folks, let me just remind me, I will be doing Larry's show today. I'll be back straight after this, and I'll talk about what we'll do during Larry's show.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, we're back. Dow's up 12, S&P's unch. So question of the day was, why is the XLE, why is there a divergence between oil and the XLE? Because the XLE is made up of different component parts, and they some are oil, within the oil sector, some are the drillers, some are, they do different things. And if you look at a TSO, Tesoro, which is screaming just the other day, it made an all-time high in the sector, Tesoro Core Oil Service, and you look at a Schlumberger, which at one point you would have thought that they were kind of in the same category. No. Schlumberger is way off its 118, 19 all-time high, and it's down at 85. It just doesn't work that way. You can see the weekly little H pattern that's forming. So, there's some different things, different components. I tell you what I am impressed with right now. In my Dow Quartet, GE, look at that. What a day. It's up 1.62% in leg E. We could even have recycled a leg B in the weekly, and it looked dead just the other day. And IBM right now is down $1.84 at 163 round number, making a peak C. I suspect that it should try to get to a leg D. But there's that pattern that we're talking about, just over, patterns repeat their fractals of human emotion. And look at this. There's the lowercase h going to a lowercase m pattern in IBM so far. And Triple M acting very well yesterday, acting well again today at 169.47, up 0.34. Leg C in the daily, leg D in the weekly, and leg D in the monthly as it recycled. And you've got UTX, the fourth component of my so-called Dow index indicator index, and it made a peak E/C in the daily, leg D in the weekly, and G/A in the G/A in the monthly. So you've got my 4 Dow components acting pretty nicely. I mean, they're considering they're doing okay. Now, I wanted to also look at VIX. Come on, how many days can you go down? This market is on the is on Kool-Aid. Well, if you look at the VIX index right now, yes, it is down, and the selling's intense, and the weekly chart is saying, well, first of all, it's at 13.07. 1474 is the 9-period exponential moving average, and 1554 is the 200-period moving average. I suspect there will be a bounce in the VIX index, maybe in the next few days, and if there is, we'll know whether there is sustainability, because if there is a bounce and the market needs to, you have to see the Dow, well, if you've still got legs D to come after peak C is made, maybe it'll take a little while, but you have to see the Dow, it's now 14, you have to see it down about 85 to 105 points to see the VIX index actually pop to the 1474 level. And then you would have to see it go to not 1554, the 200-period exponential moving average, but 1603 to 1615. In that area, it starts to say, hey, I'm going to stay in this area for a little while longer. And then all of a sudden, 1585 is the weekly 9-period exponential moving average resistance that needs to be taken out on a Friday basis, Friday at 4. So we're going to be watching that one very closely. So now let's do this. Just in the remaining time, I will be doing the next hour. That's Larry Pesavento's show, Trade What You See, and I'll be able to go through some other stocks in that particular time. So maybe at that point we'll actually have a lightning round. If anyone wants to email me quickly, email me some of the stocks you'd like to look at. So we've got a break coming up here. I'll be right back, and we'll see where the market is at that particular point, and we'll look at some of the key stocks that really make up important sectors, sector leaders. I'll be right back. Basil Chapman, and then I'll be back for Larry Pesavento's show. I'll be as the sub. So hold tight, otherwise I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.